Welcome back, investors. Today, we're diving into the exciting world of consumer cyclical stocks, focusing on four major contenders in the internet retail sector: Amazon, Alibaba Group Holding, Mercado Libre, and PDD Holdings. These companies represent the diverse strategies and operational efficiencies that define the global e-commerce landscape. Let's kick off by analyzing their price-to-earnings ratios, a cornerstone metric for understanding how much investors are willing to pay for each dollar of earnings. Amazon leads with a trailing P/E of 48.06, significantly below its 5-year average of 76.21, suggesting potential market caution or stabilization. Its forward P/E of 36.03 reflects expectations of more stable future earnings. Alibaba posts a trailing P/E of 16.36, also below its 5-year average of 20.40, which may indicate recent earnings challenges or market undervaluation. Its forward P/E of 8.61 suggests optimistic earnings projections ahead. Next, Mercado Libre boasts a trailing P/E of 61.03, above its 5-year average of 51.20, signaling strong growth expectations. Its forward P/E of 38.06 highlights a continued premium valuation. Finally, PDD Holdings' trailing P/E is 9.31, well under its 5-year average of 20.23, reflecting cautious investor sentiment. Its forward P/E of 7.69 underscores further potential undervaluation. Turning to the price/earnings to growth ratio, which balances P/E with growth potential, Amazon's PG stands at 2.67, signaling a premium on growth expectations. Alibaba's price/earnings to growth of 1.06 suggests fair valuation relative to its growth prospects. Mercado Libre's price/earnings to growth of 2.07 reflects its strong growth premium, while PDD's 0.44 signals deep undervaluation relative to growth potential. Insider ownership is another crucial metric, showing management's confidence in the company's future. Amazon has insider ownership of 10.73%, a strong sign of alignment between management and shareholders. Alibaba's 0.16% reflects limited insider stakes, typical of large Chinese corporations. Mercado Libre's insider ownership of 7.64% indicates robust management confidence, while PDD's 2.75% shows moderate alignment. Profitability metrics highlight each company's efficiency. Amazon delivers a return on equity of 22.56% and a return on assets of 9.31%, emphasizing balanced operational efficiency. Alibaba's return on equity of 8.59% and return on assets of 4.78% reflect moderate returns. Mercado Libre impresses with a return on equity of 42.62% and a return on assets of 7.42%, showcasing excellent equity utilization. PDD stands out with a return on equity of 48.55% and a return on assets of 27.42%, underscoring remarkable profitability. Return on invested capital provides further insights. Amazon's return on invested capital of 15.17% signifies efficient capital deployment. Alibaba's return on invested capital of 10.46% reflects moderate efficiency, while Mercado Libre's 20.4% and PDD's 36.39% highlight their highly effective use of invested capital. Next, let's explore share evolution, a critical metric for shareholder value. Over the past decade, Amazon's shares have increased at a compound annual growth rate of 1.64%, signaling expansion efforts. Alibaba's share count has remained flat, indicating stability. Mercado Libre's shares have also remained flat, while PDD's share count has surged at a compound annual growth rate of 13.95%, reflecting aggressive growth strategies. Continuing, earnings per share or EPS trends reveal future potential. Amazon's current EPS is $4.68, with a projected 18% compound annual growth rate over the next 5 years. Alibaba's EPS of $5.03 is expected to grow at a 15.47% compound annual growth rate. Mercado Libre's EPS of $28.19 is projected to grow at a robust 29.5% compound annual growth rate, while PDD's EPS of $10.69 is forecasted to increase by an impressive 21.17% compound annual growth rate. Examining historical EPS growth over the past decade, Amazon leads with a remarkable 55% compound annual growth rate. Alibaba follows at 17.68% compound annual growth rate, Mercado Libre at 31.07%, and PDD at an astounding 125%, showcasing varied growth trajectories. Free cash flow per share is another crucial indicator. Amazon's FCF per share has grown at 39.2% over the last decade, with a current FCF yield of 1.8%. Alibaba's FCF growth of 12.75% and yield of 7.7% reflect consistent cash generation. Mercado Libre's FCF growth of 47.64% and yield of 4.46% highlight its reinvestment in growth, while PDD's FCF growth of 55.75% and yield of 12.59% underscore not aggressive reinvestment. For dividend-focused investors, these companies offer varied profiles. None of them currently pay a dividend clearly, but let's assume a 20% FCF payout ratio. Amazon would yield 0.37% with quarterly payments of 21 cents. Alibaba would yield 1.56% with quarterly payments of 32 cents. Mercado Libre would yield 0.89% with quarterly payments of $3.84. Finally, PDD would yield 2.53% with quarterly payments of 63 cents. Operating and profit margins are critical for assessing efficiency. Amazon's operating margin is 9.89%, and its profit margin is 8.04%. Alibaba achieves margins of 12.07% and 8.93%, respectively. Mercado Libre posts 10.81% and 7.57%. While PDD leads with operating and profit margins of 28.27% and 29.09%, respectively, showcasing exceptional efficiency. Turning to revenue and earnings growth over the last 8 years, Amazon demonstrates very positive evolution, reflected in higher total returns compared to the Internet Retail ETF, ONLN, over the last 5 years. Alibaba shows positive evolution but has underperformed ONLN in total returns. Mercado Libre's growth has translated into outperformance against ONLN, while PDD also outpaces the benchmark significantly. Debt levels are critical for assessing financial health. Amazon's debt/EBITDA ratio of 1.07 and debt/FCF ratio of 3.18 indicate moderate leverage. Alibaba's ratios of 1.39 and 13.58 suggest higher leverage challenges. Mercado Libre's ratios of 1.87 and 1.37 highlight balanced financial health, while PDD's 0.56 and 0.58 showcase exceptionally low leverage. Stock price performance over the last 52 weeks varies significantly. Amazon has delivered an impressive return of 47.86%. While Alibaba has risen by 12.17%. Mercado Libre has seen a modest gain of 7.69%, while PDD has faced a decline of -32.04%, reflecting market skepticism despite strong fundamentals. Market caps reveal their scale. Amazon stands at $2.37 trillion, Alibaba at $186.60 billion, Mercado Libre at $87.22 billion, and PDD at $138.20 billion, showcasing a wide range of operational scales. Finally, let's examine analyst expectations and fair values. Analysts set Amazon's price target at $239.56, representing a 6.51% upside from its current $224.92. My fair value estimate of $166.95 suggests overvaluation. Alibaba's price target of $121.07 represents a 47.15% upside from $82.28, aligning with my fair value of $135.72, indicating undervaluation. Mercado Libre's price target of $2,289.64 represents a 33.09% upside from $1,720.36. My fair value of $1,602.25 indicates slight overvaluation. Lastly, PDD's price target of $149.48 represents a 50.22% upside from $99.51, and my fair value of $137.57 further supports undervaluation. Each of these companies presents unique opportunities and challenges. From Amazon's balanced efficiency to Mercado Libre's robust growth, and from Alibaba's undervaluation to PDD's exceptional profitability, there's something here for every investor. As always, align your investments with your goals and do your research. If you enjoyed this breakdown, don't forget to like, subscribe, and hit the notification bell for more insights into the financial markets. Until next time, happy investing!